Morning, everyone. Thank you for joining us again today. I am Sam. I'm here with Tom. Tom is NATP's Director of Tax Content and Government Relations. Tom, thanks for being here with me today.
Oh, thanks for asking me, and Happy New Year to you, and Happy New Year to everybody who's on with us.
Yeah. So we wanted to touch base with everyone today because we got some exciting news yesterday from the IRS. They are going to begin accepting individual returns January 23rd. And so, Tom, I wanted to have you on and talk, just a recap of what has been going on, what people need to remember, taxpayers and tax professionals, and kind of just give us the lowdown of what you're looking for, what you're expecting from this tax season. So, if you want to start, actually, can you just give us a little high level, maybe recap of what tax preparers should be expecting for this tax season?
Sure, that's a great segue, Sam, and thank you. And again, Happy New Year, everybody, and buckle up. Here we go, another filing season. I've been through 32 of these, and here we go again. They never cease to amaze me when we start another one. We're hoping, ladies and gentlemen, that, and you can come back later and tell me how you feel about this after tax season, that this tax season is a little bit quieter than we've had in the past. We really don't have much in the way of any pandemic legislation because the pandemic, I think, is determined. COVID-19 is still around, but it isn't considered a pandemic anymore. So it's consider that what it might be. So one of the good things you'll have this year is you don't have stimulus payments to reconcile. Nobody got any advance recovery rebates, or let's see, I think they were called stimulus payments when they were sent out. They were called recovery rebates when you did them on a tax return. So for 2022, we don't have those. We don't have advanced child tax credits that maybe somebody got money in advance, maybe they didn't. So you can breathe a sigh of relief that we don't have those issues to deal with. But before we dive into what you're going to face on 2022 returns, here we are. Here we are live. Today is the 13th. Monday is Dr. King's birthday, so it's a federal holiday. Tuesday becomes a very important date to you as well on the 17th. If you've got anyone who needs to get in a fourth quarter estimated tax payment, that's the day. So I'm a practitioner. We've talked about this many times before, Sam. I don't consider myself to be a whole lot different from all of you out there who are listening this morning or are watching. I'm actually meeting with a couple of clients tomorrow on Saturday to talk about just that. What should their fourth quarter estimate be? Maybe they got a year-end brokerage statement from their investment advisor, so we have an idea of maybe what the capital gains are, or the dividends are, and trying to make an adjustment. But anyway, so you don't forget, Tuesday is that date to have that fourth quarter estimated tax payment postmarked. You don't have to have it to the IRS by then. I talked with someone just last evening, and he goes, well, I'll make sure I get that in the mail tomorrow morning. I said, well, you can actually have it postmarked as late as next Tuesday, and it will still count. So that's kind of an introductory to think about, kind of wrap up to 2022. And in what I just said, Sam, about the notion that we don't have to reconcile economic stimulus payments, advanced child tax credits, one of the points to remember is that there were changes in 2021, thanks to the American Rescue Plan, which we saw child tax credits nearly doubled, went through age 18, more if the children were under age 6. We also had dependent care went way up, $8,000 of expenses for one child, $16,000 for two or more. We also saw expansion of earned income tax credit, took it to all ages. Used to be 25 to 64. Well, I'm going to quote an old Moody Blues song. This is days of future past, folks. All of that, forget about it. Think of the way things were in 2020. We go back to the $2,000 child tax credit. We go back to the dependent care being $3,000 of expenses for one child or $6,000 for two or more. Earned income tax credit, ages 25 to 64. Probably the only thing we saw was a little bit of ratcheting up because of inflation as to the amount of income that would fall in those ranges, and also the amount of investment income being expanded as well. But I will give you kind of a caveat, folks, as you're getting ready to start filing those returns. You could have a situation where clients are going to see less money coming back to them this year than they did last year. I know a lot of that was sent out in advance, and boy, they all forgot about it, didn't they? But the fact of the matter is, we expect, and you should expect or coach your clients, that 2022 is going to look a lot more like 2020, or maybe even 2019. We'll go back to pre-pandemic circumstances in terms of the kind of money they're seeing. So some taxpayers may be not so happily surprised. They may have adjusted their withholding at the beginning of last year, expecting that maybe these expansions that we saw under the American Rescue Plan that I just mentioned would become permanent. I actually thought they would be, but they didn't. They were left on the chopping block floor at the 12th hour. You know, when you're dealing with Congress, you're dealing with give and take. There's always negotiations, and if you want to give something to get something, that happens all the time. And again, these were not continued. So you may start out with, I don't know if you hate to start a meeting with a negative, but to say that I don't know if you're going to come out as well as you did last year, but that could also be circumstantial, you know, based on, you know, what the client is seeing.
That's a lot of great information, Tom. And so, you know, the big thing that I think is going to happen this year is there's going to be a lot more conversations with clients, and maybe some difficult ones. If I'm taking away what you're saying, you know, the smaller refunds, perhaps, you know, just changes as far as what they need to bring. You know, can you touch on things that maybe taxpayers should know going into this tax season as they begin to meet with their preparer?
Sure, absolutely. First of all, that anticipation that perhaps you're going to see, you know, smaller refunds, but from the taxpayer community, you know, one of the things we saw with probably the biggest act we had during the year was the Inflation Recovery Act, or IRA, it's called for short. Bad acronym, you know, we may think of IRAs as retirement plans, but that's what it is. And one of the things we saw in there was a continuation of the $500 lifetime limit energy credit. So, you know, those are for replacing windows or doors or insulation, all of those, I'll say the lower cost items, perhaps a water heater. So we saw that was originally going to expire at the end of 2021. Well, if you did those types of improvements in 2022, be sure to let your tax professional know. They may not think about asking, but those tax professionals think about asking. That $500 lifetime limit was extended for 1 year. And here's where confusion comes in, Sam, because the other thing the IRA did was after 2022, they've turned that credit into an annual credit, and it's better, but it's after 2022. So when we were talking about year-end planning in November and December, we were suggesting that maybe people try to drag their feet on replacing those windows or furnace or whatever it might be. Of course, hard to tell somebody on December 10th, don't get your furnace replaced and go for a month without any heat. That's not a good idea. But anyway, the preparing of the 2022 returns is going to be that $500 lifetime limit still applicable. But when clients are there and say, well, I've been putting off doing improvements, well, have we got good news for you? The Inflation Reduction Act says we have an annual credit. The $500 lifetime credit is gone after 22. So you got to have two, almost wearing two hats. One says, what did you do in 2022? Okay, energy credit wise, and then what could you plan for in 2023? And your clients are going to be very confused because you're going to be changing what you say in dealing with what did you do on December 31st, what did you do on January 1st, and there's two different rules that apply. So better credits in 2023, but don't forget them in 2022, that in fact clients could receive some credit if they hadn't used up that $500 lifetime limit. The other thing I'd like to mention, Sam, when we had for a couple of years where people who don't itemize deductions were able to take an adjustment to income for charitable contributions that they made in the form of cash. So we spent since the TCJA became effective back in 2018, we were pretty much coaching people that unless you itemize deductions, you know, there's no benefit to your charities. Well, the last 2 years, we spent recoaching them to say, well, go back and take a look at what you gave to St. Jude or maybe your church or whatever your other favorite qualified charity, that we had a $300 or up to $600 adjustment we could take. Well, folks, that's gone. We lost that on the chopping block floor as well in the omnibus bill that came out at the end of the year. So be aware of that. Now we have to recoach our clients that if they're taking the standard deduction, they're getting no benefit for their charities. But guess what? Hold on to your hats, because TCJA is scheduled to expire in just a couple short years. 2025 is shorter than you think, so we may have to re-educate our clients about starting to keep track of those things again, depending on what happens between then and now.
Yeah. So you, Tom, are also, you work really closely with our research team here at NATP. And I am wondering if you can kind of share with us, as you know, we're again preparing to ramp up. What are some of the, you know, the biggest topics you anticipate to be getting questions on this tax season?
Okay, well, that's a great question, and it depends really on what type of client you're working with. Probably the biggest buzzword floating around right now is still the employee retention credit. Every other advertisement, if it's not about Camp Lejeune's water problem, the other commercials are for don't leave $26,000 laying on the table. And it's all dealing with that employee retention credit going back to the COVID provisions that existed in 2020 and 2021. If that business, I'm oversimplifying it, but if that business continued to pay its employees but was subject to government shutdown because of COVID, there's actually credits out there to help reimburse that employer for the money they spent to keep people employed. Think about it, employee retention credit. Think of those three words, retaining employees. So you were paying them, so the credits are out there. And probably the biggest thing, in fact, we've just dealt with a question about that this morning, is if you go back as a tax professional, or for you taxpayers out there, you still have time to amend 2020 and 2021 payroll tax returns, because that's where the credit is generated. But you know what that does? It creates a credit which reduces your payroll expense, and you got to go back and amend the return for your business for 2020 or 2021, even though you may not get the money. Well, you won't get the money until sometime in 2023, we hope, if not later. But we got to go back and amend, which means amending the business return, amending the personal returns, and that's what the IRS guidance is right now. They haven't changed their tune on that. So that's a really big undertaking that people think about. Another thing that we get questions about right now is again going back to the pandemic. So the first thing to understand is the rules that the IRS or Congress put into place really dealt with regarding the pandemic as a natural disaster nationwide. So federal disaster declaration types of rules came into effect. What do I mean by that? I'm going to use just one little point that still is in effect. Let's say someone took a distribution from an IRA or qualified pension plan back in 2020 and it was COVID related. Well, there were two choices they had to make when they took the distribution. First of all, they had no 10% early withdrawal penalty if they were under age 59.5. That's good. Okay. Then the second choice they had to make was either claim all of that income in 2020, or because it was happening as a result of a federally declared disaster, COVID-19, they could elect to include that income ratably over 3 years. First year being 20, second one being 2021, third being 2022. So two thoughts, taxpayers and tax professionals. One, for that new client coming in, again, just had a new client come in on Saturday, brought me last year's return, and sure enough, I'm seeing that he's spreading it out over 3 years. I reminded him, you've got X amount of dollars to claim on this year's return. We don't have any withholding for that, so be prepared. You could owe because of that. Tax professionals do exactly what I did. Look at that previous year return for that new client, or be reminded about your current clients that if they were spreading it out over 3 years, that boom, here we are, we're coming now into year 3 of reporting that income. And I want to just throw one more point out that was kind of a wrinkle in this. I don't know if it was intentional or not, Sam, but you know, we don't make the laws, we just follow them, right?
Exactly.
One of the big questions that's been coming into research, going back to your original statement, was, okay, I had that distribution back in 2020. Is there a possibility of being able to put the money back? The answer is yes, but get this, we're reporting it, 2020 was year 1, 2021 was year 2, 2023 is year 3. Putting it back, the year began the day after the date you took it out. So I have to put an example. You did it October 1st, 2020. 2020 is not the first year. October 2nd, 2020 was the beginning of year 1, which meant the end of year 1 was at the end of 21, or I should say October of 21. Year 2 was October of 2022. Year 3, October of 2023.
Hmm.
So again, folks out there who are not tax professionals, if you did a distribution, think, boy, I would have loved to have been able to put that money back in. Maybe you've had an inheritance, maybe you've got an unexpected bonus or whatever windfall it might be. Again, I just asked that question to a gentleman on Saturday. Do you think you'll be in any economic position to put any of this money back this year, yes or no? I mean, it's not a judgment call, it's a question. Because what we could do is put some or all of that back into a qualified plan, go back and amend the 2020 return. So planning for tax professionals, clients have 3 years from the day after the date of distribution to put some or all of it back, go back and amend when they claimed it, get some tax refund money, and then to the taxpayers, again, don't forget the fact that you've got that third to report if you spread it out, or if you came into some kind of economic windfall by whatever means, maybe that would give you an opportunity to put the money back and get some of your tax dollars back. But we have through whatever that date was in 2020, that date in 2023 to put some or all of it back into that same kind of a plan, not necessarily the plan, but a similar plan, and be able to get some of your tax dollars back. So that's one that's, you see how it's kind of convoluted? Reporting
Yes.
it, 2020 is year 1, putting it back, 2021 is the end of year 1. Kind of convoluted, but again, I don't make the laws. I just deal with that. Question comes into research all the time because of just that convoluted nature of it.
It definitely makes me want to use a tax preparer if I am in that situation, because that sounds like a lot of steps to remember, a lot of things to get straight. I guess, Tom, as you know, people are starting to come into their preparers now, as they get their their final tax forms and everything. Are there things people can still do to set themselves up for success, but be it the tax preparer
Sure.
or a taxpayer?
Sure, absolutely. One of the things, I mean, that question comes in all the time in this, 30 plus years of doing taxes, probably about as long as you've been alive, Sam. But anyway, well, we won't go there for either of us. But anyway, clients will always say, what can I still do, and impact last year's return? Well, perhaps they would qualify to fund an IRA and have a tax deductible. Don't just assume that clients don't want to do that. Here's kind of a memory jogger for tax professionals. If you see someone in their W-2, in box 12, you see a code W. Just have that be a light bulb. Code W means they have an HSA. And maybe they didn't put as much into the HSA as their plan allowed them to do. Well, you know what? They can fund that up to the due date of the tax return. And by the way, the due date this year is April 18th. It's not a COVID-related thing. It actually has to do with Emancipation Day, which is recognized in D.C. and Maryland, which is April 16th. When that falls on the weekend, it's then recognized either on the previous business day or the next business day. This year, it's recognized on the next business day, which is Monday the 17th. So at least from a federal standpoint, I know some of your states are different. Maryland, for example, I think has always been like May 1st, but for our purposes on the federal side, did I say April 18th, I think, Sam? Yeah, got to give me my cheaters here. Yeah, Tuesday, April 18th is the filing deadline. So that's when people could put up to, maxing out their HSA for the previous year, or go ahead and putting money potentially into a deductible IRA. If you've got folks that are self-employed, they can establish and fund a SEP, Simplified Employee Pension, based on their profit, up to that due date of the tax return plus extension. So that could take them all the way out to October if they wished in order to do that. So there are some things that taxpayers can still do. And you know what else they can do, Sam? They can be proactive. We tend to be so reactive when it comes to taxes. Oh, I really hate this. One of my favorites, I have to throw this out, is a client will make an appointment and say, you mean I can't come in until the end of March? You're not free till then? And then when they come in, they say, boy, I was up all late last night putting all this stuff together. And I'm thinking, wait a minute. You were fussing about a month ago us not having the time, but then you still didn't worry about getting it together until the night before you came in. So that being said, we're all procrastinators. We are by nature. Maybe we can learn something, and that'd be part of the planning for tax professionals when you're sitting with that client. Oh, I remember a TV commercial that ran years ago. I have some great ideas for next year. well, maybe next year it's time to think about what might be different. I mentioned about the energy credits, those being better. There's credits for electric, or I should say, non-traditionally powered vehicles. I'll say it that way. It's not just electrics, but there are credits that are out there thanks to the Inflation Reduction Act. And so people are going to be asking what they can do that'll be a benefit to them going forward. And taxpayers, do the same thing. Ask questions. I'll be honest with you. I'm going to go out on a limb here and say, if a tax professional seems annoyed by you asking questions, I think you need to seek another tax professional, because that should be our job. And I challenge all of you as tax professionals that is our job. Our job is to teach and to educate our client so they become a better consumer and they're better aware of their obligations. Sam, you've heard me say this before. The best compliment I can ever receive from a client of mine is when they say, I understand things better than when I came in to see you. Not because maybe it's, I was the least expensive or easiest to get in to see, whatever it might say. I think that's important. Can I talk about one other thing for just a moment, if you don't mind, Sam?
Yes, of course.
Okay. One of the other big buzzes that was happening last year and included coming into research was the whole issue around people receiving the form 1099-K. That's for the third-party settlement when you use Venmo, PayPal, or whatever it might be. The rule used to be, well, they only had to be issued if there was at least $20,000 to one person or more than 200 transactions. Well, the IRS didn't change that. The American Rescue Plan in 2021 did, which said they were lowering that threshold to any amount of transactions, $600 or more. Well, right before Christmas, literally December 23rd, the IRS came out with an announcement delaying that enforcement for 1 year. Now, that being said, think about those third-party settlement companies that have gone to the ramping up. It could have been staffing, could have been software, could have been all the above to get those issuances in place. It's entirely possible and likely that U.S. taxpayers and also U.S. tax professionals are going to see clients receiving lower amount 1099-Ks for tax year 2022. By the way, it's not wrong. People can issue them for whatever they want. That minimum level applies to if they're this or more, you got to send them out. So here's the question to ask, and it's the same thing. Sam, I heard your puppy barking in the background. Luckily, mine's been quiet. And when they've had a bad day and they've made an accident, we ask them, what did you do, right? What did you do? That's what you need to ask your client, or taxpayers be prepared to answer, what did you do to receive the 1099-K? It's not accusatory, it's not a punishment, but is it part of your business? Was it a hobby? Was it just a sale of stuff you did in a yard sale and maybe you used Venmo as a means to, expedite the transaction? Was it the sale of something collectible? So be prepared to answer that question, because just because you received a 1099 doesn't mean you have to pay tax on it. But to my friends in the tax preparer community, I caution you that I think we're going to see, not to the volume we will a year from now, but I think we're going to see 1099-Ks coming out, and that you're not going to go back to Venmo and say, you shouldn't have done this. Well, they can do it if they want to. They're at least complying with the law, if not being more conservative. And then on the client side, that you're prepared to say, why did you get this? And in other words, what did you do? One last comment, Sam, is that this will also give us this year to coach the rest of our clients. I know some of those third-party platforms, I found this out in personal experience, when you go to set one up, it will ask you, do you want a personal account or do you want a business account? So if you, ladies and gentlemen, you do both, you do personal transactions and business transactions, this is actually, again, days of future past. When I had somebody in 1992 wanted to start a business, the first thing I said was, go get yourself a business bank account. Maybe it's just Sam Strong, DBA, as Sam's dog walking service, for lack of a better term. And keep those business expenses separate from your personal. Okay, well, now we brought technology in the cyber world, and we're saying that same statement, though, in the world of Venmo or PayPal or whatever it might be, keep your business transactions business, keep your personal transactions personal, and be prepared to answer, what did you do? And then we can act accordingly, because when you get down to the final analysis, you have the right to pay the least amount of tax the law allows.
There we go.
And I think that's all we're after. We're not after things that are illegal. We're after giving you every legal deduction you've got coming.
Absolutely. We did have a question. I think Tiara is how you say that, Tiara. If you're still listening, I hope I got your name right. So she has a question about 1099Ks, NEC, regardless of limits. If someone used Venmo to pay for business expenses but runs it as family and friends, Venmo will not issue a 1099K, but the business needs to issue a 1099 NEC. Is that still correct?
That is correct, and I really thought she was going in the direction of, if you don't get a 1099, do you still have to report the income? And the answer to that is yes.
Okay.
But yes, in a business setting, 1099 NEC, and thank you for asking that question. NEC stands for non-employee compensation, so that truly is business income, and that rule would be if it's $600 or more. I mean, I see in the question that you're mentioning about the $20,000. Again, that's that old rule for 1099K that's still in effect for one more year, or 200 transactions. Getting pushback, it says, from clients not wanting to ask people for W-9s. Well, I think that's a different question. If there's issues of compensating someone for services they provide, if they are incorporated, you don't have to get that information. But some businesses, again, will get it from everyone. And the fact of the matter is, regardless of whether or not a 1099 is issued, if you've provided services and you're compensated for that, you've got income to report.
Perfect. Is there anything else, Tom, as we kind of wrap up this conversation, that you want to mention, be it tax preparer or taxpayer?
Oh, yeah, I would like to mention one more thing. It came out of the Omnibus Act that was just signed, the Funding Act, right at the end of the year. And we have a provision in there called Secure 2.0, and Secure really deals with retirement planning. Biggest takeaway, ladies and gentlemen, is that they are going to continue to increase the minimum age at which people have to start taking money out of IRAs and qualified plans. The Secure Act 1, as we call it, from 2019, brought that age to age 72. Okay. Now, this new act is going to gradually take that age up to 75, although it's going to take like 10 years. But immediately we have a circumstance where in 2023, the RMD age will become 73. RMD stands for Required Minimum Distributions. I apologize for all the acronym talk. In fact, I kid around with people I work with at NETP that I need an acronym to English dictionary for some of the things that I get. Sam, you're good for that too. I'll say I'm not exactly sure what you're talking about, but we're so used to talking in acronyms that way. I'll look at Jacob's question in a minute. It says, should the tax preparer make notes of what type of 1099K income? Absolutely, Jacob. That's a very good answer to the question you asked. What did you do? You can determine that a client has a hobby instead of a business, and we could have a Facebook Live session just on that. Whether or not that activity rises to the level of a trade or business, you certainly want to document the conclusions you made as to whether or not this turns out to not be income. And by the way, there are some good tools on the IRS website that are talking about exactly what I'm mentioning. If you got a 1099K because you sold some stuff in a yard sale, you didn't make any money, the IRS says, first takeaway, don't ignore it. Please, please, please don't ignore it. So where to report it on your tax return? Probably Schedule 1 of the Form 1040, but then you take a subtraction in adjustments. So there you go. You're welcome, Jacob. Thank you for the question. So, and then document how you came up with that conclusion with your client in the event that there's inquiry made. So I think documentation is always a really, really good idea. But yes, the biggest takeaway, don't ignore it saying, well, they shouldn't have issued me this. Well, guess what? If you got it, so did the IRS. And Sam, this may seem like I'm really, really dating myself, but some people, I have to be honest with you, some people will receive something in the mail and they'll think that I don't need it, and they'll throw it away or they'll shred it. Does that mean it no longer exists?
No, of
The
course
answer
not.
is, yeah, it does. I mean, the IRS got an electronic copy or whatever. Just because you don't show it to your preparer, or you leave it off of your return if you're doing it yourself, it still exists.
So
Shredding it doesn't eliminate it. Go ahead, please.
what should someone do if that is the case? They throw it away, they shred it, and then they think, oh, whoops. What can
Well,
be done?
again, a couple thoughts come to mind, Sam. One would be if during an interview process in a tax appointment, say, "Oh my gosh, I did get something like that, and I think I threw it away." Then we'll try to recreate what it was.
Okay.
In the event that that statement doesn't come out, well then, this is where a tax professional can really help you, ladies and gentlemen, when you get a letter from the IRS.
Sure.
And the nice thing, if there is such a thing, I'm saying IRS notice and nice thing in the same breath. The nice thing about getting a notice from the IRS is that it is a proposed change. First, you ignore it, then it's not going to be so much proposed anymore. But if it's a proposed change to your tax return, you have the opportunity to reply, and that may be when, well, I left this 1099-K off the return. The IRS is proposing the worst treatment, which means probably business income. Should you then avail yourself of a tax professional, if you're not already, who can, I know where they're going to start, what did you do? And then reply to that correspondence accordingly to try to go ahead and assist you. So first thing is, please don't ignore it. Throwing something away doesn't cease for it to exist.
That's good to know. Anything else, Tom, as we wrap up? It doesn't look like we have any more questions coming in at the moment, but do you have any words of wisdom, advice, things to, people should
Imagine,
go
I was looking at some notes I made a few days ago. Imagine that. One more thing. There's always one more thing, isn't there?
Yeah, of course.
Way back when, some of you will remember, it was either 2007 or 2008, we had a first-time home buyer. Well, it wasn't really credit, it was a loan, okay? And then the very next year, they did the same thing, and they called it a credit. You didn't have to repay it unless you sold your house and made money. Okay, 2022 is year 15 of those repayments at $500 a year. So, hey, teacher, teach thyself. Last year, new client, didn't pay close enough attention to the return that they brought me in. They get correspondence from the IRS about 6 weeks later saying their refund is $500 less. Guess what? They were repaying a first-time homebuyer loan from way back when, and I missed it. I explained, I said, exactly $500? Did you get a first-time homebuyer credit and I missed it? The IRS has their systems in place that catches that. So again, maybe something to look for in a previous year's return that you review, or think about if a client says, boy, everything was exactly the same this year, and yet what you're calculating is about $500 more. That should be a light bulb. Tax professionals, I'm wondering if we've got a credit or a recapture, of that original loan way back when. But remember, 2022 is the last year we have to deal with that one. So that was kind of a passing thought. And you know what, folks? Again, I always come from the standpoint of what are the mistakes that I've made, and I don't tend to learn from my mistakes, so I do them make the mistake at least one more time. So learn from my mistakes, and maybe just spend a few more minutes going through, especially that new client's return, and have some of those light bulb moments on what you might catch. But yeah, don't ignore 1099s. Expectations should be reduced this year as to what people might get back, and also kind of planning then for what can happen in the future. That's what you're there for, to really, really help them.
Perfect. That's all that I really have for you, Tom, unless, you as the expert have anything else, people should be aware of. Otherwise we'll let people go about
me, I could always go on and talking forever, but I think we've given you enough food for thought. Oh, I do have one more thing for you. You shouldn't give me an open. Tax professionals, do yourself a favor before you dive in on the 23rd. And I know a lot of your clients won't be ready. Start to look at April the 19th and where you're going to go to recover from tax season. It's always been, kind of, it doesn't have to be some big international trip, just some getaway you're going to have, and you get to think about that during the filing season, and it might just help you get through. you have something that you're looking forward to. I know I'll have clients come in and say, well, where are you guys going this year after tax season? And realize again that it's April the 18th, but that may help you from your mental state, because Sam, it's 7 days a week. When I had a large practice, I used to work 12, 14 hours a day, 7 days a week. In that 10 weeks, you work about a half a year's worth of time in less than a quarter, or a third of the year, I should say. But yeah, go ahead and plan your getaway and take care of yourself. And we got a little plug we put in here for our plan to come to our taxposium at the end of July in San Antonio. San Antonio will be very cool and calm at the end of July, won't it?
Yes.
But I've never been there. I'm looking forward to seeing the Riverwalk. I've heard such wonderful things about it, and that San Antonio is just a great place to go. So maybe that'll be your summer getaway. And I promise you that's the last thing that I'll say in this Facebook Live session. So Sam, thank you for inviting me, and I hope everybody has a wonderful first quarter. And we're glad you were with us today.
Absolutely. Thank you everyone for joining us. I'm sure we will be back soon, sooner than you think, with more updates and more info. So Tom, thanks again for joining us. Thanks everyone for watching, and we will see you again soon. Bye everyone.